This is the story of the most severe decline the US dollar has experienced in half a century. It's a story that unfolds not in loud pronouncements, but in the quiet, calculated moves of global superpowers and the anxious decisions of investors. China has just offloaded billions of dollars in US debt, a move some on Wall Street are calling the "Sell America" moment. Something fundamental is shifting, and it's happening with breathtaking speed. Nations that once formed the bedrock of the US financial system are now discreetly backing away. At the same time, a wave of American investors is losing faith and moving their capital overseas. Why? Because the very pillars that have supported the dollar's global dominance for decades are starting to show deep and alarming cracks. In this video, we will dissect China's strategic maneuvers, expose the numbers that Wall Street would rather keep hidden, and explore why this period could signify the dawn of a new global economic order. Stay with us. In the first 6 months of 2025, the US dollar plummeted 10.8% against a basket of other major world currencies. To put that in perspective, if you held $10,000, 0 cents, in January, by July, its purchasing power on the global stage would have shrunk to just about $8,920, 0 cents. That's a loss of over $1,000, a silent erosion of wealth that most people never even saw coming. This isn't just another fluctuation in the market. This marks the worst start to a year for the dollar since 1973. That was the year the United States officially abandoned the gold standard, a move that shattered the Bretton Woods system and reshaped global finance. The parallels to today are hard to ignore. Few predicted such a dramatic downturn. The headlines were there, but the true gravity of the situation was lost in the noise of daily news cycles. This isn't the result of a single event or a momentary panic. It's the culmination of a perfect storm: aggressive and unpredictable trade policies, staggering levels of government spending, and a precipitous drop in global confidence that the US can responsibly manage its own economy. And no nation has signaled this loss of confidence more forcefully than China. While the world was fixated on trade wars and tariffs, China was making a much quieter and arguably more potent move. In April 2025 alone, Beijing discreetly sold off $8.2 billion, 0 cents, in US Treasury bond. The news, which surfaced only recently, was more than just a financial transaction. It was a clear and deliberate message. China is signaling that it no longer wishes to be a primary financier of the American government. This action was, in part, a reaction to the Trump administration's policies, but it's also a crucial piece of a much larger long-term strategy. For years, China has been methodically working to de-dollarize its economy and reduce its vulnerability to US financial pressure. The April sell-off demonstrates a new level of seriousness in this endeavor. What makes this so alarming is the historical context. This isn't a new trend, but an acceleration of an existing one. Back in 2013, China's holdings of US government bonds peaked at over $1.3 trillion, 0 cents. As of April 2025, that figure has fallen to just $757 billion, 0 cents. That represents a staggering 44% reduction over 13 years. In essence, China has already divested itself of more than $600 billion, 0 cents, in US debt. Now, consider the implications if other nations decide to follow China's lead. The question becomes critical: who will fund America's spending? To understand the gravity of this situation, we need to look at how the US government operates. It consistently spends far more money than it collects through taxes. As of early 2025, the US national debt has surged past an astronomical $36 trillion, 0 cents. To bridge this ever-widening gap, the US Treasury issues bonds, which are essentially IOUs. It borrows money with the promise to pay it back later with interest. For decades, countries like China, Japan, and the United Kingdom have been major buyers of these bonds. In doing so, they weren't just making an investment, they were financing the day-to-day operations of the US government. Everything from military spending and infrastructure projects to social security and public sector salaries. The entire system hinges on one fragile assumption: that there will always be willing buyers for US debt. For a long time, this assumption held firm. The dollar is the world's primary reserve currency, with over half of all central bank reserves held in dollars, and US Treasury bonds were considered the safest of safe haven assets. But that dominance is no longer a given. The cracks in the foundation are becoming too large to ignore. If countries begin to sell off US bonds en masse, whether due to fears of inflation, political instability, or a strategic desire to escape American influence, the United States would be cornered with two terrible options. It could dramatically raise interest rates to attract new lenders, making its own debt burden even more expensive and likely triggering a recession, or it could resort to printing more money, a move that would inevitably fuel runaway inflation. Neither path leads to a stable economic future. The Treasury bond market is the very foundation of the US financial system. If that foundation cracks, borrowing stops, and without the ability to borrow, the government simply cannot function. This raises the specter of a scenario once deemed unthinkable for the world's largest economy: a sovereign debt default. As the world grappled with interest rate hikes and trade disputes, China was executing another strategic pivot, this time away from paper assets and towards a timeless store of value: gold. While shedding US dollars, the People's Bank of China has been on a gold-buying spree of historic proportions. According to a report from Metals Focus, central banks worldwide are on a trajectory to purchase a massive 1,000 metric tons of gold in 2025, marking the fourth consecutive year of such large-scale acquisitions. This global trend is driven by a desire to diversify reserves away from dollar-denominated assets. China has been a consistent leader in this movement. Why the sudden rush to gold? The answer is simple. Gold is reliable. It is a neutral asset belonging to no single country. Its value cannot be erased by a presidential tweet or a Federal Reserve policy shift. It cannot be printed into oblivion or frozen by sanctions. For Beijing, the lesson has been clear. The US dollar can be, and has been, used as a weapon through sanctions and exclusion from global payment systems. By shifting its reserves toward gold, China is insulating itself from this geopolitical risk. The scale of this shift is immense, and it underscores a profound lack of faith in the future of the US-led financial order. This crisis of confidence is not limited to foreign governments. A growing number of wealthy Americans and institutional investors are also signaling their unease by moving their money out of the United States. The year 2025 began with a fragile sense of optimism, but by summer the mood had soured. Unpredictable trade policies and escalating conflicts with traditional allies have created an environment of uncertainty that investors abhor. A recent Gallup poll paints a sobering picture, with more than half of Americans believing their financial situation is deteriorating. The wealthy, however, are not waiting for polls. They are taking action. There has been a dramatic surge in Americans seeking foreign investor visas and second citizenships. Meanwhile, on Wall Street, the Sell America moment is in full swing. According to Bank of America, in just 1 week, nearly $9 billion, 0 cents, was pulled from the US stock market. This isn't just a bad week, it's a powerful indicator of fading global confidence. So where is this capital going? The primary beneficiaries appear to be Japan and Europe. Japan, once viewed as economically stagnant, has attracted a record influx of foreign investment thanks to corporate reforms and price stability. Europe is also experiencing a surge, with investors viewing its political and regulatory environment as more stable and predictable than that of the US. In the first quarter of 2025 alone, European funds saw net inflows of over €150 billion, 0 cents, a stark contrast to the outflows from US markets. This isn't merely a portfolio rebalancing, it's a fundamental shift in the global mindset. The long-held belief in American exceptionalism, the idea that the US economy will always lead the world, is being challenged like never before. In this new era, investors are prioritizing stability and clear long-term rules, and for the first time in decades, they are finding those qualities outside of the United States. Even major financial institutions are adapting to this new reality. Bank of America is currently overhauling its entire trading infrastructure in Europe, a move designed to capitalize on this long-term reorientation of global capital. This isn't a short-term bet, it's a strategic preparation for a world where the United States is no longer the undisputed magnet for global investment. This leads us to the crucial question: is this a temporary flight of capital, or are we witnessing the early stages of a permanent global restructuring? Can the US government alter its course and restore the trust it has lost, or has the world already begun to turn decisively in a new direction? One thing is certain, the old assumptions are crumbling. The pillars that upheld an era of American financial dominance are under immense strain. For investors, for governments, and for ordinary citizens, the landscape is changing. The next chapter of this story has yet to be written, but the prologue is a warning that we cannot afford to ignore. To stay ahead of this economic shift, subscribe to our channel and turn on notifications. The next headline could be even more explosive.